This is an article from Bankrate. Credit card balances continue to grow in November per Fed report. I want to break down this article because there's so much information here. If you're somebody right now that if you're trying to plan out your next credit card sequencing, if you're trying to plan out your next auto loan or your next mortgage, right? You're trying to buy a house in the next few months, that if you're implementing the wrong behavior practices, if you're doing the wrong things with how you're using your credit cards, it's going to negatively impact how you're going to be able to get more credit cards, more loans in the next couple of months. And this article breaks that down, but most people, they're not going to read this. Most people aren't going to really pay attention to this, but I'm going to show you guys emphatically how your spending habits may negatively impact how you're going to get your next credit card, if you're going to get approved, if you're going to get the best interest rates. But stay locked in because we're going to talk about all that and more on today's episode. All right, so now let me just make this bigger. So again, we're at bankrate.com. Credit card balances continue to grow in November per Fed report. Okay, guys, so I went ahead and I highlighted basically 3 paragraphs out of this article that I think is going to drive in the point. For November, inflation, which has been boosting consumer spending, rose 7.1% over the year, following October's 7.7% gain. It seems the growth in debt for November is mainly the result of earlier than usual holiday shopping. This is not a surprise. Every year, every fourth quarter, everyone goes ahead and they spend a whole bunch on airline tickets, presents, gifts, wine. Everyone's partying in November, December. Happens every year. There's nothing crazy about that. Let's go down a little bit more. The Fed also reports that credit card interest rates rose to 19% in November from 16.2% for the third quarter. On cards that carry balances, now this is very important, guys. On cards that carry balances and are charged interest, the rates were an even steeper 20.4%, rising from 18.3%. The rise come about as the Fed continues to hike its target interest rate to fight inflation. Inflation has been impacting everything when you go to a supermarket, when you go get gas, everything that you've been spending on over the last however many several months. We've seen that the prices have gone up, so that's impacting how much we're putting on our credit cards. The Fed has increased interest rates to combat inflation. So we're seeing interest rates go to 19% in November, up from 16% in the third quarter. And if you're somebody out there that is holding a balance on your credit cards, which means you're not paying off your entire balance at the end of every single month, you're looking at interest rates even higher at 20.4%. And if you're someone that is in the subprime market, which means your credit score is probably not that good to begin with, you might be seeing interest rates 24%, 26%, upwards to 30%, right? These interest rates are going to be crippling. These are back-breaking type of interest rates. So when you put all that into one pot, that right there is going to be impacting how difficult it is for you to go ahead and pay down your balances. Let's go down to the last one. While the Credit Reporting Bureau expects new credit card accounts will drop from 87.5 million in 2022 to 80.9 million this year, the number of new accounts will still remain higher than at any time in the last decade. So if you've been somebody that has been looking for credit cards, if you've been applying for credit cards in the last, let's say 24 months, it's actually been a really good time for you to go ahead and apply. We've seen that. Even with the pandemic and after the pandemic, the last year and a half or so has been very good if you've been trying to apply for credit cards. But here's the key point that I want you to take away. New card accounts open will drop off 7.6% as lenders tighten their underwriting as they prepare for a potential recession. So anytime you hear any YouTuber or any person on Facebook, Clubhouse talk about, oh, Navy Federal, they're super easy to get approved for their credit card products, or Navy Federal gives great credit limits. These are kind of like blanket statements, but they're not written in law. These things change depending on the Fed, depending on interest rates, depending on the market, depending on if the banks and these credit unions, if they're scared and they get a little bit nervous when they think a recession is about to hit, which some people right now, by the way, are thinking that it might happen in 2023. They're going to restrict how much they give out. The underwriters, the people that are behind the scenes trying to figure out whether or not you are credit worthy, the underwriters, they get nervous around this time of year. Why am I wanting to highlight underwriters becoming nervous around this time of year, or when they think is going to be a possible recession? You see on the screen, I have a screenshot, right? It says Credit Karma, you've gone over your credit limit. If you are somebody that has, let's say you had a credit limit for $3,000. In October, November, December, you've been spending, you've been traveling, you've been buying drinks, you've been buying gifts for family, you've been just under your credit limit of $3,000. You kept your limit at maybe $2,800, $2,900. The thing is, when you carry balances, and we just talked about this right now, every month that you carry a balance, the credit card issuer is going to add on interest to your balance. So even if you've been at 2,800, 2,900 with your credit limit of 3,000, that added interest may actually put you over your credit limit. So you may have a $3,000 credit limit credit card, but you have a balance of 3,100, right? You went over your credit limit. If that happens, guys, that is bad. We already talked about a little bit about how banks and most credit unions, they have some sort of 24-month look back period anyway. They're wanting to see, do you pay down your credit card balances? Have you been late? Do you have collections? Do you have charge off? All these things that we always talk about over and over and over again, right? Those are the things that a lot of you guys are aware of, but are you aware that if you do go over your credit limit, it's almost just as bad as those other things that I just mentioned? The financial institution, they're going to be looking at you and saying, you had a $3,000 credit card limit. Not only were you not able to manage your funds, you actually went over. You're spending over what we actually allowed you to have, and that's a red flag. All right, let me read this last sentence again. New card accounts open will drop 7.6% as lenders tighten their underwriting as they prepare for a potential recession. So if you already have the lenders that are scary, Navy Fed, Chase, Bank of America, they're already a little bit shaky. They're already a little bit scary right now, these banks, because they don't know if the recession is going to hit. So the underwriters, they're going to pull the reins. They're not going to accept and open up as many credit cards as they did last year. I just showed you guys that 7.6% decrease is what they're expecting. That number may go up, that number may go down, but just know that the lenders, the banks, the underwriters, they're scary right now. They're going to be a little bit more conservative. So if you're somebody right now and you have a high credit card utilization, we already discussed how that negatively impacts your credit score, right? So that's nothing new. I understand it's easier said than done. There's a whole bunch of different variables. There's a bunch of layoffs that are currently happening right now in the US. There's a lot of different things that are impacting your ability to pay off your debt. But again, for those that are looking to do a credit card sequence in the next few months, you're looking at Chase, you're looking at American Express, you're looking at FNBO, you're looking at Navy Federal, and you're thinking, okay, these are the next 2 or 3 cards that I'm going to put in my funding sequence, and I'm going to go after these cards next. Or if you're someone that's like, in the next 6 months, you know what, I might be trying to get this mortgage. If you're someone that is, you know, you're going to be trying to go ahead and shop and you're going to be looking for different financial products, just know going over that credit limit, that's a red flag. Remember, we talked about reason codes before. Hopefully you watched that video I did about a month ago. There's a whole bunch of different reasons why a bank is going to look at you and say yes or no. I will approve you or I won't approve you. Going over your credit limit, it's almost like a double whammy because you already had the high utilization, which is already dragging down your score. Then you went above your credit limit. Now you negatively changed the account status of your credit card, right? All these things play into the part of whether or not you're going to get that credit card, whether or not you're going to get that loan. All of this plays into it. This is something that we may not think about, right? Because I know a lot of us are like, okay, well, I'm close to my credit card limit. I'm just not going to spend. I'm just not going to spend any money this week because I know I'm close to it. But then the credit card company adds their interest for the month, boom, and you went over, right? And you get that alert from Credit Karma. If you have any other credit monitoring service, you're going to get that email. It's going to say you have gone over your credit limit, and you're going to be like, what? I didn't spend anything this month. I didn't spend anything this week. But having that high utilization with an already high interest rate, you don't want this to catch you by surprise, right? That's pretty much it for this video. Another thing, guys, I want you guys to be aware of, I'm going to be dropping our inner circle for money codes within the next couple of days. This is going to be a private community where I'm going to be going over a lot of the subjects that we talk about on the YouTube channel, but I'm going to be going even more in depth, right? Last week, I just recorded a 3-hour video, a 3-hour webinar on if you're somebody that's trying to buy your first home, what to look for, how to make your contract irresistible, that if you're ever in a highest and best situation, that you're going to make sure that your contract is the sexiest as possible, you get selected and you get the home. Inside, I'm going to have the credit codes course. We're actually working right now on the business credit codes course, where if you're somebody that is trying to get business credit, you don't know where to start, you don't know how to add trade lines, you don't know how to get the higher credit limits, that's going to be in there as well. We're going to be doing live coaching. So much we're going to be putting into this inner circle. Just be on the lookout for it. Make sure if you're not already, make sure to hit that bell notification, because once we do go live, I'm going to let the YouTube guys know first. If you're not on my email list, make sure to be on my email list. I'm going to be packing the inner circle with so much value, so much content. Like, subscribe, comment. You already know what to do. It supports the channel. And that right there is pretty much it. I'm going to catch you guys in the next video. Have a blessed one. Have a safe one. Peace.